And joining us now to discuss is Joseph Trevisani, economic and currency analyst at FXStreet. Joseph, good afternoon. How are you doing today?
Good afternoon, Don. Nice to see you. Have a little bit warmer weather here, so it's looking very nice right now.
Right. Hopefully the snow doesn't stay too much longer. So, Joseph, let me ask you this. What are you seeing as the driver behind this rally? A lot of analysts have already chipped in, but what do you think?
Couple of things. I think we have a bit of a relief that there was concern, say a week, 2 weeks ago, a lot of concern that there was about to be a war in the Middle East, or at least we were about to perhaps attack Iran. That does not seem to be happening at the moment. It may still happen, but that is one relief. Whatever you want to say about the pros and cons, the rights and wrongs of this, wars and military action at that scale make markets extremely nervous, and with very good reason. You also have an economy that's growing very strongly. You probably have about a 4% or more for the last 3 quarters on average. That's very good. You had a tremendous sell-off, primarily in techs, that is perhaps, you might say, unwarranted, in the sense that there is still, I think, a great deal of potential to the wonderful 7, whatever you want to call them, for the AI and other technology futures. So with those things, I think you got a very, very strong snapback today. People are saying, hey, these technology stocks are much cheaper than they were. Let's buy them. And that fueled it.
Okay, so are you saying this rally is driven more by fundamentals? You did bring up the Magnificent Seven, right? So is it fundamentals or driven by sentiment?
Well, I think it's both. I mean, there are fundamentals here that are strong. As I said, the economy is growing. We'll average out for the 3 quarters after the first of last year at more than 4%. That is very strong growth. You can say what you want about it, but it's real. So once you have that, and you have what seems to be at this point essentially unlimited potential for the application of AI programs, devices, there is an enormous amount of growth that is in train here. And so for that much, I think it very much is fundamentals. As far as sentiment goes, I think, as I said, you had a relief from the fact that we don't seem to be about to attack Iran. Again, points aside, from an economic and markets point of view, that's something that markets like.
Okay, what would you say is the health of this rally, the breadth here? How does it compare to the Magnificent Seven-driven market that we've seen before?
That's true. One thing that people probably don't realize as much as they should is how much averages are actually driven by a few number of very, very active and very, very pricey stocks. And that's certainly true of the tech rally right here. But behind that, you have a potential, and I think more than potential, for broad-based growth. What is 4% growth? What is 4.2% growth? 4.5% growth for those for 3 quarters? This is broad-based growth. It is not simply because the Magnificent Seven are growing very, very rapidly and their price appreciation is there. There's broad-based growth behind this. So I think there are both are what's making it such a powerful rally.
What role does the expectation of rate cuts play in this rally?
The expectation of what?
Rate cuts.
Rate, yes. Well, I think you're going to get some of those, but that's not something I think that's on the minds of the market right now, because you're not going to get them anytime before May, certainly, I think, when we have a new Fed chairman, So I don't think that's really a factor right now. Is that a long-term factor? Yes, it might very well be. But that's not entering into this rally, I don't think.
Okay, Joseph, just one final question. Any indications of a bubble in this rally, whether we're talking about sentiment towards AI or other things?
Yes. Any rally that is as powerful as this and setting new records as it does can always be characterized as a bubble, especially when it reverses and people start taking profits. However, I do not think that this rally, is a typical bubble in that it's based almost purely on speculative excess. I don't think that's the case. There is real economic value here, and there is real economic potential. Will it play out for all of these companies as as well as the rally has predicted? No, probably not. Some will be better, some will be worse, some will end up being losers. But there is genuine economic reality here. So I would say, no, this is not a bubble.
Okay, really appreciate your analysis, Joseph. Thank you so much.
Thank you for having me. Always good to see you.
Good to see you as well.